Hello, Oracles. So, lots to talk about today. Today we had the Fed meeting, we had the FOMC, where they raised rates 50 basis points. So, when Jerome Powell discussed this, he was saying that, in their meeting, they're kind of leaving the door open. And it's very similar to how we've been talking about being agile in the market with our portfolios. That's sort of what Jerome Powell is alluding to as to what their plan is with the Fed. They're kind of looking at all of the different options that they have that are out there, taking in all the different data that they can. He said, you can't really give guidance for the next 60 to 90 days because there's so many different variables that can play out over that time. So they kind of just say, we're going to take it one step at a time and say, this is the range of what we think we can do. So they said they're leaving on the table the potential of 50 basis point hikes for the next two meetings. He did say that they did agree that 75 basis point hike is not going to happen in the next two meetings. Obviously, data can change. They may have to do something drastic. But he said based on the information that they have right now, that is off the table. That is one of the main reasons why the market rallied like it did today. And he did confirm again that ultimately their goal is to get inflation down to 2%. Now, 2% doesn't mean that they're going to be just at a steady 2%. We know it's constantly fluctuating, but if it averages out to around 2% every single month, that's what they're looking for. That is the goal. So keeping around that 2% mark is where they're aiming. So in order to get there, they've got to raise interest rates to bring inflation down. And he did discuss the negative GDP growth that we had for Q1. He said most of it seems like it's a lot of lack of inventory that people had just from the supply chain issues and that nature. So it's not like it's a shrinking economy. There were just other factors that were involved that led to a negative GDP. We still have a very strong economy right now. We still have households and businesses saving a lot of money, which is a good sign for a growing economy. So between that and then, seeming like interest rates are starting to come down, which we will find out more about next week in the CPI data, seems like we're moving in the right direction. But Jerome Powell did say that this is not a time where we can take our feet off the brakes. We still need to pay attention to what's going on. He wants to see consistent data moving in this direction, which is why they have on the plate 50 basis point hikes for the next two meetings, just in case. They want to make sure that at least for the next 3 months, we are continuing to move in this direction. And this is why what I'm looking at is a potential for a really strong end of the year rally. So looking at previously at the beginning of the year, we were anticipating 25 basis point hikes for every single meeting for the rest of the year. So now they decided to front load it. So we got the 50 basis point hike now, probably going to be getting another 50 basis point hike in June. If we do end up getting a third one in July, we might actually get a couple of meetings at the end of the year where we don't get any rates going up. That is going to be a very bullish sign because that means that they're getting to the softish landing that Jerome Powell alluded to today. So a soft landing is when you can bring down inflation, raise interest rates, and not cause a recession. So I think he alluded to it being a softish landing because he knows it's not going to be easy. He mentioned it many times in the meeting today. This is going to be very challenging for them to do, and they're constantly monitoring everything that is going on to be able to get us to that point. So their plan, as of right now, if things continue to move in this direction, we will be able to get out of this without a recession or just a minor or paper recession. And a paper recession is just 2 quarters in a row of negative GDP because that is a technical recession. That's it. So technically get a recession, you may not even notice it. Similar to, Q1, I guarantee most of us didn't even notice that we were negative GDP. Everything seemed like it was business as usual. So if we get 2 of those quarters in a row and that's it, technically we got a recession, but it really wasn't noticeable. And so looking at how the rest of this can play out, today was the first hurdle. Today was we knew that we were going to be getting a 50 basis point hike. We got exactly what we were looking for. So the markets didn't move on that news. It was really the news that Jerome Powell said they are not going to do the 75 basis point hike. That's when the market took off. Jerome Powell seemed very calm today, very confident with what was going forward. And so the next hurdle that we have is CPI. And so one of the things that he did mention is they're monitoring all of the data. And so when you and I on here discuss all of our portfolios and I talk about being an agile investor, that's it. You're constantly monitoring everything that could potentially happen over the course of the future. That's what they're going to do. And the next big piece of data we're going to get is CPI next week. So here's how I would mentally ask myself questions of what do I want to do with my portfolio tomorrow? If I think that CPI data next week is going to come in line or lower than expectations, I would buy tomorrow, probably heavier than normal, because we are probably going to see a little bit of a rally going into next week. Maybe the day or two before the CPI, we might see a little uncertainty or breath holding similar to what we saw Monday, Tuesday this week. So we could see that, and then if we come in lower, we will most likely rally hard afterwards, because that is going to be the indicator that the Fed is going to do a 50 or maybe even 25 basis point hike in June. Now, on the other hand, if you think that CPI data is going to come in higher than anticipated next week, now might not be the time to buy. Maybe buy a little bit just in case, but wait, because if inflation comes in higher than expected next week, that could mean that we're definitely going to get a 50 basis point hike and potentially see a 75 basis point hike with the Fed flipping their decisions. So that you got to monitor. So again, these are just two different scenarios that I'm playing out in my head. Personally, I think we are going to come in line with inflation next week. The last couple of CPI readings were literally spot on. So we may come in line next week, probably see this bit of a rally continue. Now, one thing that we did see previously when the Fed had the interest rates go up and we saw the market rally, the Fed has tools to use to bring inflation in line. One of the tools that they use is raising interest rates. One of the new tools that we have found that they have been using is just their words. When they see the market starting to rally into euphoric territory, that could potentially lead to more inflation. So the Fed at that time will come out with some hawkish statements to kind of cool the market off. This is what we saw the last time we rallied up. The Fed started talking in a little hawkish manner. We heard that 75 basis point hike talk, and the markets cooled off. So this is potentially how it can go and how the Fed is going to monitor between meetings, keeping the euphoria low and keeping inflation down. Because one of the big pieces is inflation expectations. And if inflation expectations continue to go up, inflation will in turn follow that pattern. So if stocks start to go up, inflation could start to go up. The Fed needs to keep that in check. They will say something like, maybe we have to do a 75 basis point hike, and the market's going to slam on the brakes and bring us back down like last time. So for me, similar to what I do with Tesla, where I just kind of follow what Elon and Tesla say as far as my projections go, I'm going to do the same with the Fed. So whether you believe the Fed is going to get us out of this with a soft landing or not, the market right now is following the words of the Fed. So I'm going to do the same thing. And when the Fed is going to tell us that things could change and we've seen what they have been doing, I'm going to take this as we are not in the clear. The Fed has said there's a lot of challenges that still lie ahead of us. There's still a lot of uncertainty that is out there. The market does not like uncertainty. So right now we do have clarity. We can see a rally. But that uncertainty can just show its ugly head at any single time. So I'm going to take this time, look at some of these other stocks that I have that I may want to get out of, and I have dollar cost average down a little bit, and if I can get out of them, I will free up that cash awaiting the next dip. I do believe that we will get another dip. We always get dips. How far down it will go, I don't know, but we always get one. So I'm going to continue this roller coaster ride cycle as I have been all year and sell out what I can, free up cash, spend that cash on the stocks that I have higher conviction in when they're on the dip, and then move forward, rinse and repeat. And so today we actually saw some great high growth stocks seeing a little bit of life like we hadn't before. SoFi was up 11%. That was outstanding. AMD, after great earnings yesterday, had another great day today. Tesla up 4.77% on the day. That was awesome. I got a little buy-in. I got 2 buys under 900 before we saw the rally coming back up. So that was awesome. I wanted to buy a little bit more, but I really wasn't sure. So I just I held back a little bit. But I'm getting myself built up closer to that 10 shares. And we'll discuss more about Tesla in the morning as far as what we have for some news for the future. So great things going on there. But all in all, it was a great day, amazing way to end the day with the rally. I do think we will see this continue for a few more days. And if CPI data comes in as expected or lower than expected, we can see quite a boom coming, at least in the near term. Let me know your thoughts in the comments. How'd you feel about today's FOMC meeting? What do you think they're going to do for rates going forward? Where do you think the market is going to go from here in the near term? Do you think CPI data is going to come in line? Or do you think it's going to come in high and scare the market again? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.